Hey guys, bringing you a new video. This is more of like a what would you do with your first 100 or 1,000 or 500 or whatever amount you want to start with. And we're thinking smart investing, safe investing here. So I'm just going to go over a couple of things that I would do or what I would recommend and show you some tools I use too. So this is called Smart Asset. You can basically plug in some numbers, get an idea of what your investment would look like X amount of years down the road. So I'll just kind of read this out. So if you start with $1,000 today, every month you're adding 100 to it, and then the average rate of return 4%, which is a pretty healthy return, and you give it 10 years to grow. So we're starting way down here, right? Would be in 1 year. We would have the $1,200 we contributed every month, the $1,000 we started with, and then interest, the $63. That's that 4% number. And then going all the way till 2032, we would have contribute $12,000 plus our 1,000, so that's 13, and we would have made over $3,000 during that time. This is a cool tool because it kind of shows you the bigger picture, and it's really written out, and it breaks it down year by year too, which is really nice. And the cool thing about this is I think we can go up to 30 years. Let's go to 30 years, and as you can see how it compounds and kind of just snowballs and gets a crazy amount. So if you are in your late teens, early 20s, if you do this now, by the time you're mid 50s, which is, in this day and age, maybe half your life, if you're, living somewhat decently healthy, you would have amassed $35,000 off interest, which is a crazy amount of money, based off what you started with. You're almost doubling. It's basically giving $1 and getting $1 back, if that makes sense. If you see the total interest earned here is just under $36,000. The total you put in was $36,000. You're almost matching it, which is an insane amount of return. And then some people are like, well, what do I buy with $1,000? I would buy. I've talked about this before, like strong stocks. So we're talking about stuff on the S&P 500. It's not something you have to sit there and monitor every day or every hour. So if you're buying stocks of Apple or Microsoft or Ford or Google or Amazon, stuff like that. And you can buy up to your $1,000 mark, or if you want to start with $100, we can put that in. It'll be less, but it's a start, which is nice. This update, we'll do $100 and 10. We'll knock this down a bit, and the numbers aren't crazy, but it's the same ratio. You know what I mean? You're almost getting back that $3,600 you put in. If someone starts with, you can start with $0 if you want to. Okay, I'm sorry. The minimum is 100 for this chart, and then if you contribute $200, it's insane what you could do. I know not everyone can just find money to contribute or anything, so you could start out with as little as possible. That's why I said if you have 1,000 or 500 or 100, or even if you use Robinhood, you can start out with as little money as you want. So this is a cool tool to use. The average return of the S&P 500 is about 10% a year, but you have to keep in mind that is the average of bad years and good years. So you can't put it in 1 year and be like, oh yeah, 10% in a year, because it could be 3, 4, 5, 6%, or it could be negative, which wouldn't be great. But you got to think long term for this. And I will give you some websites I use. I use Yahoo Finance, and I use MarketWatch. This is for due diligence, which I think is very important. If you are building a portfolio, I wouldn't necessarily just set it there and forget about it. I would try to keep a tab on your investments. If you're doing some smart big companies, probably quarterly, monthly. You don't have to check every day, like I said before, but just something smart. A couple more things. What else did I mention? As soon as you start going into the red too, or going down or in the negatives, if you invest $1,000 and then say a couple months from now you're at, I don't know, $900, you're down 10%, right? I wouldn't panic because it's only been a couple months. You have to remember that you're setting these long-term goals for your future self. So in the grand scheme of things, 2, 3, 4 months isn't really going to matter when you're sitting on this for 30 years. So I think it's remember just to stay confident and be like, hey, these are some strong investments. This is what I'm sticking with. I'm going to do this for however many years I want to do it. Don't worry about a down month or down couple of years, because if it's really the long game, then 2 years out of 30 is an insignificant amount of time compared to the big game. So that's just something I had to share too. But yeah, with tools like this, different websites, different articles you can read, different things you can invest in, there's a lot out there. So it could be overwhelming, but that's why I made the channel, to help other people learn. Thanks for watching.